You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. So be sure to check out our live stream via the Mixlr app or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. Learn more about QuickStrike at bantix.com. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means it is time once again for Twifo, This Week in Futures Options, a program where we break down everything going on the futures options side of the fence. So we'll talk some equities, maybe we'll talk some energy, maybe we'll talk some ag, some metals. You never know what's going to make it onto the show. That's why you have to tune in every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, the Options Insider Radio Network. I'm pleased to be joined here in the studio by double duty guests here in the show. First off, holding down the old CME hot seat today is actually a returning guest here on the program, Mr. Rick Rosenthal, the Director of Business Development for the FTSE Russell Indices over there at the Cboe. Rick, welcome back to the program. Welcome back to the studio, sir.
Thank you very much. Great to be here.
And next to him, I am pleased to say, for a record, I think this is the first time we've had you 3 weeks in a row, Sean. Usually at this point, you're in Europe or Asia or some other far-flung locale. But here you are in the studio again, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there in FTSE Russell. Sean, welcome back to the program to you as well.
Mark, thanks again for having me. It's always great to be here, and I'm very excited to have Rick Rosenthal join us today. He's in the hot seat. I think there's lots to talk about, especially when we get to RVX and Russell options. Rick is the Cboe's in-house expert on the material, so let's let him have it today, please. He's in the hot seat. Let's go for it.
Well, he is squirming. Let's make him squirm a little bit more. We'll give him a respite for now, though. We'll start things off the way we always do, looking at our big movers and shakers for the week. What's trading it up over there on CME Group? You guys can play along, as always, cmegroup.com/Twifo, TWIFO. That's how you find all these fun reports. If you did that, you'd see which way we should go. And I usually ask this of Sean. Rick, I will give you the chance to choose this week. Should we start with the big movers to the downside or the big movers to the upside this week? What floats your boat?
Let's go up.
I can see why you two are friends, Sean. You two think alike. Sean has never chosen Sean has never chosen the dark side once. You are a perpetual, you're a permabull here, sir. Let's go to the upside first. Top 5 movers to the upside this week. Number 5, corn, up 2.6%. It's pretty much not a huge option story on the upside this week, listeners. You got corn, then you got number 4, Eurodollars, up 2.9%. That's pretty much where a lot of the option story ends because number 3 is iron ore. Talked about that before on the show. Not a lot of love on the option side there. Up almost 3% this week. Number 2, live cattle, up 4.33%. Also not a huge active options story. And number 1 with a bullet, just blowing the doors off everything else this week, is lean hogs, up 14.4%. You guys love your hog love out there, I know. Unfortunately, there's not a lot of love for the options. It's kind of a light options product, but a huge moving week, 14.4% on the hogs. Let's go to the dark side now. Let's start the bottom of the dark side, which I guess is, if you got to be here, that's probably where you want to be. It's our old friend, the Nikkei, denominated in the yen. Remember, that's off a little over 2%, about 2.1%. Number 4, soybeans. Get a little ags in the mix this week, 2.6% to the dark side. Number 3, platinum, off about 3.25%. Number 2 here, copper, off 3.4%. All metals to the top of the dark side here. Number 1 is palladium, off 4.6% this week. So metals not having a good week here as we keep on rolling. But since we got both you guys in the studio here, I think we'll start kicking things off in the land of all things equity. You know, coming into the showtime here, listeners, and you know, if you're listening to Option Block a little while ago, it's kind of a weird, kind of mixed day out there. You know, last couple of weeks, week and a half or so, we saw a lot of renewed optimism on the trade war front. Markets were rallying. Things seemed like they were good. Earnings were, for the most part, pretty good. So vol was coming off. Markets were rallying. Today, to kick off the week, not so much. Markets are kind of mixed to slightly down, and vol kind of popping back up there a little bit. Coming into showtime, we had VIX right around a 13.75 or so. That puts it up about over a point, about 1.35 points from where it was this time last week. Our old friend VVIX, a.k.a. the volatility of volatility, threatening that 100 handle, that triple digits to the upside there, up to about a 96. That's up nearly 7 handles from where it was last week. So vol getting a little bit more frothy out there. And, of course, our old friend RVX. Sean, this is like the 3rd week in a row I've been saying this. RVX at about a 1675, so effectively unched. I think it's about a 0.05 difference from last week. Does that surprise you, Sean? Yet another week here we are talking about RVX is kind of effectively unched?
You know, as you know, volatility is volatility. It seems to be just holding its own. But that spread has tightened, right, over the week from last week.
It has tightened quite a bit. Most of that on the VIX side, obviously. VIX coming back up, and that lifts all boats out there. VIX coming up, so that spread has tightened. It was about 4 1/3. Yeah, about 4 1/3 last show, and now it's down to about 3 points. So you're right, that has tightened quite a bit. Maybe, Rick, that's a good starting point for you then, because we know a lot of our audience their ears tend to perk up, and they tend to get more interested in Russell vol versus S&P vol when things like that happen, when the spread gets tight or when it gets fairly wide. We're kind of coming on the tighter portion of that range now. So what have you been seeing in your purview over there in Russell land as this spread is starting to tighten up?
So the average on the spread is about 3.24, at least over a 52-week time period. It's right now 3.26, so it's tracking around average. But what I want to bring to your audience's attention is the realized vol, the 10-day, 20-day historical vol on Russell is actually at its 52-week low. So you have low volatility in the Russell, you have low volatility in the S&P 500. So there might be an opportunity to harvest a little volatility risk premium, looking at the implied vol relative to the subsequent 20-day.
The old harvesting of the risk premium here. That's a popular trend. You know, you'll actually like this, both of you. We were just on our previous show, the Option Block, talking with the folks over there at Fidelity and asking them what their clientele is trading right now. And a large swath of them seem to be diving into the Russell 2000. As we're talking right now, listeners, Russell 2000 at about a 1590, so just shy of that 1600 level. And that, at least according to them, seems like when a lot of their audience starts to kick in and get interested, when they start seeing these kind of round technical levels, and 1600 for whatever reason has proved to be a bit of a resistance to the upside. So that seems to be driving some paper, at least on their platform. Rick, is that something you're seeing anecdotally as well out here? Folks are starting to flock into Russell at these kind of levels?
So we are. I mean, if you look at the put-call ratio, right now it's about 1 to 1.25, so it's relatively low. But put it into context. How are the indexes in general performing? NASDAQ is up 30%. It's at a 52-week. It's at a 52-week high and record high. S&P is up 23% on the year to date, up on its record high levels. Dow up 19%. All of these indexes made record highs this week. Russell 2000 is up 18%, not bad, but its 52-week high was made in May. It was 1618.37. Its record high was made in August of 2018, and that's about around 1740. So the Russell is actually about 8% off its record high. It has some potential to go much higher.
That's something Sean and I have talked about a lot before, and for a lot of our audience, and we're going to get to a lot of your feedback in a bit, listeners, like I promised Sean last week. It's going to be all listeners all the time for the rest of the show here. But it's interesting to watch because, this is one of those indices that is certain audiences, they're coming to it for the first time. They're trying to learn, wrap their heads around it. And as I've said to Sean many times, it kind of moves to the beat of its own drummer, particularly lately, with all these macro trends going on. Russell is kind of doing its own thing. I'm curious, you're out there engaging with a lot of the institutional and professional clientele, talking to them about Russell volatility, about the spread, all these things we're talking about here. What's their take on this kind of product right now? Is it something that they're, because obviously structurally it should be more volatile. So is that a thing that attracts them? Are they maybe a little bit intimidated by the fact that it kind of seems to do its own thing? What are you hearing out there anecdotally there?
For those investors that have a risk-on appetite, the proxy has been the S&P 500. It's been a growth story. So that's why you're seeing kind of a narrow subset of equities moving higher, which, the FANG stocks, which is why NASDAQ is outperforming. We're not seeing the attention going into the Russell 2000, and probably we should, because with the Fed lowering rates 3 times, that actually plays quite well to small businesses. So it's not as followed by Wall Street as some of the other larger indexes. It deserves a little more attention because there are opportunities there.
That's why we talk about it here on this show all the time. It seems like one that is ripe for some new products. I think we're going to get to that in a little bit, and new opportunities, all sorts of fun stuff in the space. What do you think, Sean? We kept them waiting long enough. Should we dive into some of their listener queries, sir?
We made that commitment last week, so I think it's a good idea. Let's hear some questions, and let's get right at it with them.
All right, then it's time. Without further ado, listeners, it is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment. The whole show is your show, but this is really where you guys get to take the reins. And we're doing an extended, protracted futures options feedback. Sean asked for it. You guys wanted it. We put the call out to you guys. You guys responded en masse. So let's see how many of you we can get onto the show here this week. Let's start it off. Always fine to start with a little bit of love here, Sean. Let's start off with some love from 698th. 698th wants to say, thank you for this fine program. Well, you're welcome, Mr. or Mrs. 698th. We do it for you guys at the end of the day. Glad to see that you like it. Sean, what do you think about, you're a very optimistic guy. What do you think about a little bit of love here from Mr. or Mrs. 698th?
It's always appreciative to receive those kind of compliments, so thank you very much for that.
It warms the cockles of the old heart. All right, let's keep on rolling here. Like me wants to know, how do I create the movers and shakers report that starts the show each week? Also, can I get some burgers? Well, you're a little bit late on that front. Rick, Sean, and I just had some delicious small Cheval gourmet burgers. I believe, is it not rated the best burger in America, sir?
Yes, it was rated number 1 in the nation a few months back. It might even be 8 to 10 months ago, but so it might have lost its rank
How often is that updated?
But still,
is it like a monthly thing? I don't think so.
Yeah, well,
we'll call it the best burger in the nation. Either way, Mr. and Mrs. Lekme, you got to come into the studio for that. So if you're here in Chicago and you feel like some gourmet burgers, hit us up. Let us know. So if we all sound like we're a little bit in a beef coma, it's because we just had some very impressive burgers, to say the least. So unfortunately, no burgers digitally. You got to come in person for that. The first part of your question: how do you create, the movers and shakers report? Well, that's pretty easy. I'm assuming you guys already went to cmegroup.com/Twifo or wherever it is you're getting access to this data here, all the fun quick strike stuff. If you're doing that, head on over to the Quick Reports Home tab, and then from there, there's a section you'll see called Market Scans. And once you click on that, you'll see it. It's going to come up. It's going to default to 1 day. And so what you have to do, listeners, is click on the date range button and then change it to 1 week. So now you're going back for the past week. And once you do that, you'll see all sorts of fun stuff like lean hogs up 14% for this week and palladium off about 4 1/3% to the downside. So again, this is this week in, so we make sure that date range goes back a week. So if you're not doing that, you're not getting the full report. But that's how you do it for everyone who wants to play along. All right, here we go. Another comment. More love. A lot of love filing in the show here this week, Sean. We got Ingenuous. I like that handle. They want to know. They want to say, I should say, I love the network, and Twifo is my favorite show. I tune in every week. No one else talks small cap vol, let alone crude and metals vol. It's a must listen. Well, there you go, Rick. Look, getting some love here for small cap vol. I didn't realize that, but I guess we've become the de facto source for all things small cap volatility, sir.
Thank you, Ingenious. Really appreciate it.
Sean, does that warm the old heart as well to see that we become a mecca here for what does he say, small cap vol along with crude and metals vol? So there you go.
I agree. And again, Rick, you called this person ingenious. It's ingenuous, but I think the comments are genius. So I'm gonna second your motion there and call this person ingenious as well. But yeah, small caps. It's one of those topics that needs to be brought up. The Russell 2000 is a tradable, investable product that needs the attention of the industry and needs attention of the market. And I'm excited to be a part of it. I'm watching volumes grow in terms of open interest and in volume on a day-to-day basis. And it's just a pleasure to be working with our partners, Cboe and CME Group, and growing this entire small cap ecosystem together. I think it's exciting, and we're just going to continue to get out there and spread the word about these products.
I agree. It is an ingenious comment from Mr. or Mrs. Ingenuous. I left off the best part. He says, it's a must listen. Well, there we go. Thank you for that. We agree. We like to listen to it, but hey, we might be a little bit biased here. All right, next up, Nico. Nico wants to know, why does, this is the perennial question, why does Eurodollar trade so many options? Sean, we talked about Euro. We didn't talk about it this week, but Eurodollar will traditionally do on one call strike more than many other complexes will do in the entire week. So, what do we talk? 250,000 contracts in one call.
One day we were sitting here. Yeah.
So, yeah, serious numbers. I do want to get some people on from, who trade Eurodollars more so we can kind of talk a little bit about what really is driving a lot of that activity, not just from a macro or other perspective, but what types of trades are popular out there, what unfolds as it rolls, because the volume is so just exponential. But you're my old school Eurodollars guy. When you were out there, Sean, what was it that was driving a lot of the flow out there? I know it's obviously big institutional clientele doing large blocks. What are they traditionally doing out there, sir?
They're hedging. They're trying to enhance their portfolio with options. They're taking a statement in a direction. I mean, Eurodollars are used by a massive global ecosystem, which from an institutional base, it's just trillions of dollars, right, in notional value every single day. So that the majority of this is institutional business. But yeah, I would strongly recommend getting the Derek Salmon in here to talk about options and specifically speaking about interest rates, because CME Group just does a phenomenal job. And again, the liquidity is just incredible in that entire product.
Had Derek on down in D.C. a few weeks ago. We didn't get a chance to touch a little bit on Eurodollars. Maybe it was time to do a deep dive. So we'll tell you what I'm going to do here, Nico. I'm going to table your question for when we get some more participants in Eurodollars. We can really parse that flow a little bit more for you, so we can see exactly what these size institutions are up to with these ridiculous size type trades out there. Because I know a lot of you are fascinated. Like you mentioned, Sean, not a lot of 10-lot mom and pops out there, but still a lot of interesting paper going on out there. Speaking of out there, Rick, here's one that's right up your alley here. This comes from Hoyler. Hoyler wants to know, two-prong question here. First off, how far out can I trade Russell 2000 options? And then the second part of the question, how is the liquidity out beyond 1 year? So it sounds like, Rick, Mr. or Mrs. Hoyler wants to get into the leaps, wants to get a little bit out there a bit. So first off, they want to know how far they can go. And then B, once they get out there, how is the liquidity shaping up out there, sir?
So I'm going to take advantage of Mr. and Mrs. Hoyler and go a little off script. The cash-settled Russell 2000 index option listed at Cboe is a hybrid market, meaning that you can trade it electronically or you can trade it in an open outcry fashion. And it's actually listed on Cboe, C2, which is electronic, and BZX. So what makes this interesting is you have 13 market makers providing liquidity in each one of these markets. Most of the activity is focused on the front, let's say 90 days. Most of it, I would say, in the first 30 days. But the product is listed going out to December of 2021. So you might see a wide bid-ask spread if you go to the screen going beyond 90 days. It doesn't mean there isn't liquidity. It means that the quotes are wide. So it's a dance. If a customer shows interest in a particular strike in a particular year, there will be a response to a bid or offer. And sometimes it's negotiated, and sometimes it's done in an open outcry fashion. So it depends on what kind of demands, what kind of size the trader is looking for. But you should have no problem getting a trade done going out to December 2021. The price for risk, the market makers may, their markets may reflect additional risk and widen out the bid ask, but you'll find liquidity there.
Sean, anything you want to add here for Mr. or Mrs. Hoyler? They want to sling some long-term Russell options, sir.
It's interesting. There's such a strong demand for shorter dated options down to weeklies, and I think that that came from the increase of activity in normal options. The week before expiration, volume would pick up, and there'd be lots of order flow during that time. So I think exchanges came out with a weekly product. It's interesting to hear someone ask for long dated options at this point. It's interesting to see. I wonder if there's something behind that question. Maybe you can come back to us next week and give us some more information.
Well, there are those who want to put on protection. They put on a collar. In some cases, they'll use a flex option. And
exactly.
The flex option will go beyond December 2021. So there are institutions that want to put on protection on a portfolio that's benchmarked to the Russell 2000. They have the ability to do that. That's not your average trader.
Exactly. So that's why I'm mentioning to the customer to come back to us, give us a little more information. Let's keep talking about longer dated options with you.
Yeah, I'm with you. That's why this question kind of stuck out to me as well, because you're right. Equities, 90% of the conversation is within the front month, right? That's where everybody wants to play. And in the weeklies, that's where so much of the action is. I don't care what index it is. NASDAQ, Russell 2000, SPY, whatever you're looking at. It's all weeklies all the time. So, yeah, we can count on one hand. Not people who've come to us asking about long-term vol, let alone beyond a year. So this is interesting. Yeah, if you have more info you can provide to us, Mr. and Mrs. Hoyler, what you're looking at, what you're looking to do, what you saw when you looked at the liquidity out there, because obviously there's a variety of different Russell products you can look at to go out that far. Let us know. Let us know. And if you do pull the trigger on something, let us know. We'd be curious to see, because you're right. You are one of the lone folks asking us about longer-term vol in the equities. All right, next up we got a involved one here from Adam Sam. Name sounds familiar. I think he's written in before. He says, hello. Well, hello, Adam. He says, I have been using futures options recently to stay in trades longer. So I'm assuming he means with his underlying futures position, I'm assuming. He says, my main trade is to sell the opposite of the direction that I think the future is going. So if I think it is going to go up, I sell puts. I used to sell calls further out of the money as a hedge, but this decreases my profit significantly when I am right. Would it be better to buy further out of the money puts as a hedge with the same expiration date or go further in the future for hedging? Thank you for your input. Well, a lot to unpack here. It sounds like you're an underlying futures trader to start with. You don't say which products you're looking at, so maybe that would be more information as well. What products you're looking at would help us to get a little bit more specific. Are you trading crude? Are you trading metals? Are you trading S&P? We don't know. But in general, this notion of using futures with futures options, it is a good use case. The way you outlined it, the second way is the more traditional way. If it's going to go up, and you write a call as a covered call as a way to get paid to get out. And of course, selling puts against a futures position is not exactly a position we see too often for a variety of reasons. First off, obviously, you're going to get long more. So I'm assuming you're okay with that portion of the trade where effectively, if it goes down, you're picking up more futures. So if you're okay with that, I would be, personally, I probably maybe a little bit more comfortable if you were going to buy further out of the money spreads. So that means you're not just naked short puts now, you have a spread. So your risk is mitigated there. I think keep it simple. I mean, particularly if you're starting soon, if you start getting into calendars, which means you're rolling the short leg of that put spread out multiple months, you're getting a lot of moving parts to that. Keep it in the same month that you have the short put. That way everything's a nice, neat little package. A short put spread against a long futures position, that gets you a little bit extra premium. If it drops within that range, you'll pick up some more futures. If you go beyond it, your risk is mitigated. I think I like that use case better. Obviously, you're not comfortable with selling calls, so I won't advocate that for you. You don't mention if it's going to go up. You don't mention maybe buying calls. That's an interesting use case as well. But this is not one we see that often for a variety of reasons. Margin, risk, getting long more of the same position. But if you're okay with that, I'd be okay with you adding a put spread as a leg to this. Rick or Sean, anything? Let's assume he's talking equities because it sounds like he might be. Anything you want to add for Mr. Adam Sam here?
You have unlimited risk, so it does make a lot of sense to put on a spread so you can have an opinion on market direction, which it sounds like that's what he's trying to do. And this way you can define what kind of risk exposure you want and still participate in the market direction. So
yeah, remember, too, there's no free lunch. Your broker's going to tie up capital for that short put position. So as long as you're okay tying up more to effectively get extra long with that short put, that's what you're doing. But if you're okay with that, and then, of course, the spread will help mitigate some of that, and will help mitigate some of the risk. Anything you want to add, Sean, or should we keep on rolling? We got a lot of questions to get to.
Perfect. I probably would just would have reiterated what you both have just said, so let's keep moving.
You can always tell a genius, right, because he thinks the same as you. So there you go. All right, let's move on here. D-Lister. I like that handle. D-Lister. You're an A-lister to us, Mr. D-Lister. He says, since at-the-money implied volatility is structurally higher in the Russell 2000s, does that mean I'm getting better returns for covered calls in small caps than in SPY? Well, Rick, good thing you're on the show here. We're getting some good, I guess what did that guy say? We're the mecca for small cap. I guess that's becoming true here. We're getting a lot of questions about this. We also have gotten a lot of questions in the past, Rick, since your last appearance, about those indices we talked about before, the buy right indices in the Russell and what's going on out there. So maybe that's a way we can kind of view this question. You guys have all those covered call indices in the Russell 2000. How are those performing? Are they performing better than, let's say, the S&P? Maybe we'll start there, Rick.
A-list question from D-Lister.
I agree. I agree.
So kudos. So there's a couple of components when you're looking at any kind of option writing strategy. In this case, we're looking at it looks like a covered call. So you're collecting premium when you're writing the call. You're receiving the premium, and for that you have somewhat of a cushion. If the stock market can do one of three things. It can go up, it can go sideways, it can go down. So if the market goes up, you have capped your upside. You'll have underperformance. If it goes sideways, if it goes sideways, you're collecting that premium and you say thank you very much. If the market goes down, you're going to have underperformance in your equity holding, but you've received some of the premium, which cushions the downside price movement. So the question, I think, is, are you getting better returns in small cap versus SPY? You're taking into consideration what is the premium that you're collecting. You have a higher volatility in Russell than you do in the S&P, so you are collecting more premium, but you also have different performance in the indexes. And as I mentioned earlier, the S&P 500 year to date is up 23%. The Russell is up 18%. So Looking at it in aggregate, the buy rate on the S&P 500 is outperforming the buy rate on the Russell 2000 because of the underlying performance. Now, I think you asked, how are the Cboe strategy benchmark indexes performing? We have about 40 of them. In the Russell 2000, we have a buy rate on the Russell 2000. We have a 30 delta buy rate. We have a put rate. We have a weekly put rate. We've got a zero cost put spread collar index, and we have RVX, which is the Cboe Russell 2000 volatility index. The put rate typically does quite well. Why is that? Because small caps are more volatile, and there's a strong appetite for hedging, which pumps up the premium in puts. So for those who want to do a cash-secured put-right strategy, you can actually add this to an equity position as a way to enhance the risk-adjusted returns on a portfolio. So there are institutions that do this. There are pension funds, endowments, foundations that actually allocate a 15% portion of their equity holdings towards a cash-secured put-right strategy because it enhances the risk-adjusted returns.
Yeah, and there's a lot of moving parts to a covered call. It's not just the straight-up level of implied vol, because you're right, net, that should be higher. I think we're looking at just the top of the show. It was nearly a 17 at the money implied for the Russell versus about a 13 and a half, 13 and three quarters for the S&P. So that alone is a pretty wide gulf. So that alone should do, but that alone is not the entire question. There's things like skew and all these other factors that come into consideration. You're talking about how much premium you're actually harvesting, how much you're getting paid to actually sell that call. So that's something we need to probably sit down and maybe break down on like a strike by strike, look at the skew, a lot of other moving parts to it. And so that's an interesting question. Maybe a good little homework. I'm gonna put a little H next to this one. I might come back to this one when we crunch some numbers on it. And you're right. Also, Rick, when you're looking at it from a broad buy right perspective, it's hard to take the underlying performance out of that equation because it is such a huge part of the buy right itself. So there's a lot of moving parts to this. Interesting. I think this is an interesting one, and it shows, hey, the interest is getting out there, which I like to see. So far, Sean, if you've been playing along, we have interest in premium harvesting and long-term volatility. That latter one is still kind of surprising me. Is it surprising you? Sure.
You know what it is? It's interest in small caps, and all of it is good, and it's all good for the ecosystem. So I couldn't do a better job of reflecting buy rights and writing calls or put rights or the indices. We've got the in-house expert, Rick Rosenthal, here today, and today's that opportunity for him to share that information with us. So I'm really appreciative that he's here.
All right, let's see how many more we can get here on the show. We got some product queries, this time from Michael. Michael Sheen, he wants us to look at, let's see, says, how about some pound dollar with all this Brexit nonsense going on? Well, we don't get a lot of FX love here on the show.
We don't get a lot of FX.
So yeah, we're getting long-term Russell vol and we're getting FX. So I guess we're getting everything old is new again. Everything outside the norm is coming back in, that's why we do these listener shows, right? We can see what the listeners have on their brain. All right, let's go to FX here. I pulled it up. By the way, you guys can play along. CMEgroup.com/Twifo. Head on over to the FX portion of the drop down. Then, of course, pound USD is where you want to go. If you did that, you'd see right now that spread is hovering a little bit shy of the 1.3 level, at about 1.29, almost 1.288 to be precise. So we're threatening that 1.3 level out there in the spread. The vol is actually up and up pretty firmly across the board. Most of the major contracts, it looks like they're up about a point, maybe a little bit more, with the inflection point coming right around DEES of this year, which is, of course, the most active contract as well this week, with about 77% of all the flow going up in that DEES contract out there. If you're wondering to yourself, you're saying, what is the number one trade out there this week with the bullet? It would be the 1.30 calls out there in DEES. So a nice even money, even numbered strike out there, doing nearly 11,000 contracts. That was the biggest print out here by far, and the lion's share of that going up on Tuesday, nearly 7,800, about 3,000 on Monday, and kind of just scattered contracts going up the rest of the week. So big prints on Monday and Tuesday here for those 1.30 calls, and actually both of those were closing. So we're closing about 6,000 contracts. Someone coming in looks like taking off a fair amount of upside here in upside in DEES in pound USD. Let's look at the skew really quickly here while we're at it. We'll go to DEES again because that's where the lion's share of the flow was this week. Those puts were about 0.5% rich to the at-the-money last week, so puts were leading the dance. This week, they're up nearly 5%, so 4.9%. So puts getting pretty firmly bid up here, and the calls are kind of unched. They were about 0.33% cheap to at-the-money. Now they're about 0.6%, so coming off ever so slightly, but not a lot. So that's interesting. The action this week was in the calls, but in the skew, it was a lot of movement in the puts, which is not usually what we see out here, which is kind of interesting. Again, a lot of interest. Not a huge volume product. Looks like about 22,000 contracts this week. So that 11,000 contracts and that 1.3 calls in D's really, that's pretty much half of the volume for this week. So not a huge option story, but an interesting one here nonetheless. So thank you for asking, Mr. Sheen, and love to have a little bit of FX love make it here onto the show as well. Speaking of love, Sean, we got some 5-star reviews coming in from folks all across the board here. Spreading the love here. Let's start with Rocket Labs. Rocket Labs saying, great show. And I don't know what platform these are from. These are just all kind of coming in from across the board. So if you're leaving them on iTunes or Google Podcasts or Spotify, or wherever you're leaving the reviews, we thank you guys. Remember, don't ask questions in those reviews. We don't get to those as often. Get the questions in via all the other platforms, social media, website, everything else. So the reviews are more just for helping other people discover the show. Rocket Labs says, 5 stars, great show, dynamic and educational. Greatly enjoy listening to your guys' show. I'm just getting into trading futures, and I am finding your show educational as well as entertaining. Keep up the great work. Sean, did your mother write this review, sir?
No, it's definitely not my mother, but I appreciate the kind words and the compliments. And you know, it's all about clients getting out of the markets what they want to get out of them, and you have to understand them to trade them. So if we're doing our job of educating you or making you feel more comfortable in terms of getting into a market or exiting a trade, we're doing our job. So I'm just happy that there's folks out there getting more out of the show than just us talking about volatility.
Well, it's not just Rocket Labs. You've also got another 5-star review by, this is a mouthful, Bajasaki. Bajasaki says, awesome. Love the show. Very informative. Looking forward to more fresh insight every episode. Well, thank you very much, Bajasaki. Glad you're enjoying it. Got another one here. Sean got here from RX Edwards, maybe Dr. Edward. He says, options info must listen to. I like it. Very concise and to the point. Yes, we talk options info, and you like it. I'm glad that you're liking it out there, Mr. Edwards. Mr. Sean, look at this. Our iTunes rating right now, currently 4.6 out of 10. So someone had the temerity not to give us 5 stars. Someone gave us 4. Everyone else giving us 5, Mr. Sean. How about that? It's a lot of love from the folks out there, sir.
That's I think an A if this was like Catholic grades, right? I think it's up there. maybe a B plus in public school. I'm older. In case I'm offending somebody, I apologize, but we appreciate the high grades.
Keanu number 3. Maybe Mr. Reeves is listening to us right now. He says, I greatly appreciate your information on the dairy markets. Oh, look at that, dairy love. We need more info on these marketplaces. Please continue. Well, tell you what, you're right. Dairy has been lighting it up of late. You know, it's been an extremely volatile complex. Not one we usually talk about because it's not a huge option story and it hasn't really been doing a heck of a lot. But these days, that's actually changing quite a bit. I'm pulling up here. If you want to find it for yourselves, listeners, agriculture, then go down to dairy. And I just pulled up the Class 3 milk. It's one of the few that actually trades a little bit of option. Looks like this week that Class 3 milk is up about 1.1%. The vol off quite a bit, off about 1.5 to 2 to even 4 points in some of those nearer term contracts. So it seems like vol getting crushed a bit out here this week. Lion's share of the paper coming in D, so a little more than a third of that flow. And of that flow, a total of about 6,000 contract listeners, so not a huge option story, obviously, but the big print actually, it's number one ever so slightly the 19.5 calls. So these are slightly in the money calls. I guess depending on what future you're looking at. That D's future is actually about 1870, so these are slightly out of the money. That front future going away in about 2 weeks is at about a 20.25. So a little bit backward, it seems like, out there in fluid milk land. So yeah, interesting stuff. The skew really quickly looks like it hasn't changed a lot. The puts are about 0.5% rich. Now they're 1.5% rich this week. Last week, the calls are nearly 4% cheap. This week, the calls got bid. This week, the calls are 5.3% rich. So they pretty much swung completely, did a 180 out here. So I'm guessing someone was buying those 19.5. So I'm going to go out and say. So interesting stuff. We're looking forward to dairy becoming more of a story as it continues to get a little bit more volatile, get a little bit more options traction on. We'd love to talk about it more. And as it gets more volume, we will. In the meantime, our friends over there on the Volatility Views program, the guys from T3, they have what they just created that's called the Milkshake Index. So check it out for yourselves. T3index.com is the place to go. They're kind of looking to break down volatility in the dairy space. I believe most of the products you're looking at are focused over there in the Australia, New Zealand region, because that's where they're from. But still, if you're fascinated by dairy volatility, the Milkshake Index is probably one you want to check out. All right, next up, we've got Jack Tan. Jack Tan wants to know, what's more volatile these days, WTI or nat gas? Well, let's look. Let's look and see if we can find the answer for you here. Let's go to crude oil first, and that's, of course, in the energy drop-down, listeners. And let's pull up our old friend W. Let's do a quick WTI rundown while we're here as well. Haven't had a chance. This is actually a rare week, Sean. We've been so busy with questions and everything, Russell, we haven't even talked WTI. Isn't that crazy, sir?
It is. It's good to get into crude because it has been moving.
Yeah, our crude heads will be angry if we don't touch on this. Let's do a quick overview while we're here, listeners. WTI coming into showtime at about a 56.80, so slightly off that 57 handle, but still maintaining that upside, the lingering prospect of perhaps this end to the trade war seems like it's given a little bit of a lift here to WTI. Vol, kind of a mixed bag across the term structure, up slightly in some months, off slightly in others, so not a huge movement one way or the other this week from a vol perspective. The action this week was in that front D's contract with less than a day to go. So all of you who've been asking us, why don't people trade short duration in WTI? They clearly do, just not in the listed weeklies for whatever reasons, because this contract has 1 day to go, and it's done 60% of the paper this week, with the number one print being the 55 puts in D's with 23, almost 24,000 going up this week. So they clearly will trade contracts, and this is still trading today. 8,000 trading today. I'm guessing a good chunk of that closing, but still, it is trading with less than a day to go now. So clearly people will trade short duration contracts in WTI just for whatever reason, not in those listed weeklies, which kind of gets back to what we were saying before about maybe there's something structurally behind the scenes with the way those quotes are disseminated on various platforms, keeps people from trading them. All right, looking here, the at-the-money vol here, that D's contract's at about a 26 3/4, and the Jan contract's at about a 30. So let's just use that as our benchmark. Let's go out now to nat gas, and let's see what's going on in nat gas. Remember, keep those numbers in mind for me, Sean. 26 3/4 and 30. I'm gonna come back to you in a second. All right, here we are now in nat gas. Nat gas actually trading it up here this week. 425,000 contracts on the tape. The biggest month here is D's yet again, with about the 2 1/4 puts doing 51,000 contracts, 62, almost 63% of the paper this week coming in that front D's contract, which has about 11 days to go. The vol coming off here pretty hard as well, off about a point and change. Actually, I take that back, 4 points and change here in nat gas. So it looks like it's a bit of a vol apocalypse out here this week. Not surprising, maybe some of those big moves are dying down a little bit, so we're seeing the vol come in as a result. So if you listened to the show recently, nat gas has been moving and shaking and rocking and rolling. The 2 1/4 puts, we're at about 2.645 right now, listeners, in nat gas. The 2 1/4 puts, once again, it's been all these quarter puts doing 51,000 contracts this week. The lion's share on Monday, 37,000, and then the rest kind of scattered throughout the week. About half of that opening. So opening paper, once again, on these 2 1/4 puts. It's interesting. Someone's got an axe to grind down on that far out of the money strike with about 11 days to go. That's been kind of the number one strike for a few weeks now. But getting back to the listener's question, he wants to know what's more volatile. I've been distracted by all this paper out here. Let's see. If at the money vol here in D's with the date with 11 days to go is 52 1/4, and the Jan is 53.5. So Sean, it was what, 26 3/4 and 30. 26 3/4 and 30 versus 52 1/4 and 54. It's like asking my little guy doing some basic math here. Which one is greater, Sean?
I'm not even going to answer. It's an obvious.
Clearly, nat gas is the more volatile of the two. If you guys want to do the analysis for yourself, cmegroup.com/Twifo is the place to go. Look at that at-the-money volatility. That's the place to begin your journey here. That looks like it's the 1, 2, 3, 4, 5, fifth column from the left there is where you could go. All right, here we go. Another show suggestion here from Gleo. How about a product complex report where you break down the most active options in each complex? So an ags complex report, then a metals report, and so on. It's not a bad idea, Sean. The problem is this show would still need to be about 3 hours to get everything on there. So what do you think about this suggestion? We should do a report for so a metals one, then maybe an equities, then an energy. There's still a lot here. Let me look here off the top of my head. We've got 1, 2, 3, 4. I mean, we'd still be going for quite some time here, sir. What do you think about that idea?
We always do the movers. It might not be a bad idea to do the rank of the most active in terms of options volume. Might not be a bad segue in one of your shows. We're doing all the questions today for listeners. I kind of like the idea. Of course, we talk about Eurodollars every single show.
That's the problem with that, right? It'd be the same players all the time, right? Because, in the metals, it would be gold. In energy, it would be nat gas or WTI, one of those two.
Right.
Yeah, and obviously in rates, it would be, and pretty much anything else, it would be Eurodollars, because that just dominates all tapes.
And it would be the Russell 2000.
Of course.
Exactly.
It would be all Russell 2000.
It would have to be. I'm on the show, so there you go.
All Russell 2000 in the equities complex. So it would be a lot of the same products if we did it that way. Mr. and Mrs. Glio, which is why we don't. We look at what's moving for the week and kind of let it go from there. But that said, if you guys have queries, you want to get a little, palladium or something on the show one week, you know where to find us, right in. And when ags are moving, we'll rotate those in. That's, if you do ags, it would probably be corn every week. So it'd be the same products every week, which might get a little stale. So we like to mix it up a little bit. But there's something to be said for that, for trying to maybe find a way to feature all of the complexes. Again, this is only a 1 hour or even less show sometimes. So it's hard to fit all of it in here on this. This could easily be a 4 or 5 hour program, listeners, with all the complexes you guys want. And I get it. I love it. I love you guys want the show to keep going. We like that. But you're trying to find a way to fit it all in. With just the volume of Russell 2000 alone, it takes several hours here just to break it all down. All right, speaking of Russell 2000, let's end on this one, Rick, here. This comes from below. I like that. It comes from below.
It's got to be down under.
Maybe. It's a little ominous. I kind of like it. This question is from below. We need a little spooky music to go with it. From below wants to know, can you provide any information on upcoming Russell volatility? Well, he wants you to open the kimono a little bit here, Rick.
So I'm going to be a little dodgy here. Cboe has a wonderful index group that comes up with new ideas. If you go to cboe.com/benchmarks, you'll see a number of, as I mentioned, strategy benchmark indexes that are used as benchmarks to measure the performance of various options-based strategies, put rights, buy rights, collars, butterflies, etc. Some of them are based on the Russell 2000, some are based on the S&P 500 and other indexes. One that's getting a lot of interest right now, a lot of eyeballs, are these buffer protect indexes. And so I want to draw the distinction between an index that's measuring performance as a benchmark and a product that's tradable. So some of these benchmarks are put into a 40 Act fund, which allows traders, investors to gain access to the strategy just by buying a ticker. So within the world of Russell, you say volatility products. I call them volatility products because they're related to options. There's a put right on the Russell 2000. Wisdom Tree is the ETF issuer. There's a buy right on the Russell 2000. Global X is the issuer. And Innovator Funds recently came out with a Buffer Protect Russell 2000 product. It's done quite well in terms of raising assets and drawing interest. And this strategy is offering a 9% buffer protection to downside movement and upside participation to a cap. And I'm going to do a little plug for FTSE Russell. They're actually going to have a webinar describing this strategy. Perhaps, Sean, you can point them to where someone could register for that webinar next week.
Well, you can email Mark here at Twifo, or you can email me at smith@ftserussell.com, and I'm happy to forward you the registration info. So feel free to reach out to me, and I'll send it to you. Thank you.
All right, listeners, that music means we've come to the end of an epic listener Palooza. Thanks to everybody who wrote in. You guys have many and varied questions. I love to hear from you guys. We love the love. We love the comments. We love the suggestions. We love the questions. We love all of it. So keep that stuff coming. We love to hear from you guys. But before we go, let me go back around the horn. You kind of already heard a little bit of a tease from our guest here, Mr. Rick. But Rick, maybe if there's anything else you you want to leave our audience with maybe a little bit of a tease. I mean, I talked to our listeners can hear it for ourselves. Ariane Cricky is on the network. I talked to her down to D.C. recently. I asked her about RVX, and she seemed very open to the possibility of much more than I thought, of Russell 2000 volatility coming back in the near future. If you want to hear that for yourselves, listeners, go on over to our interview program. It's right there in the archives. But that said, Rick, if there's anything you want to leave our audience with, maybe you just talked about the webinars and the other things, maybe anything else you want to leave our audience with, a little bit of a happy tease to end the show with, sir. Now is the time, sir. The floor is yours.
So I'm dating myself. Several years ago, people used to monitor small caps around this time of year because there was what was called a January effect, which small caps would tend to outperform beginning of the new year. And the reason for that is because these are small caps, and investing in these products tend to outperform. So given that the NASDAQ is now at record levels, the S&P 500, the Dow, they're all at record levels, Russell 2000 is quite a distance from its record levels. So maybe it's time to take a look at the rotation that's taking place, because we're seeing money now going into value type indexes. It might be interesting to take a look at structuring an options position where you can manage the downside risk, participate on the upside with the Russell 2000, and take a look at maybe a vertical call spread or a risk reversal spread. Just throwing it out there.
I like it. January effect. Yeah, you don't hear the January effect too often anymore. So some January effect verticals there in the small caps. There you go. Check it out. And Sean, we kind of did a little bit of a hint of a tease. You got a webinar coming up. Anything else you got in your back pocket you want to leave our audience with? Now is the time, sir. The floor is yours.
No, just reflecting back on the performance of the Russell 2000 index, it's just right below that 1600 number, which is like this. It breaks through that, and we hear it on TV all the time. If it breaks the 1600, it's gonna move to some upside. I don't know. Just keep watching it. I say it every week, but the Russell 2000 index is a tradable, volatile, interesting index, and it should be in your portfolio. And I just look forward to helping the clients here understand it better, trade it better, understand it. But again, I can't leave the show without bringing up RVX in my excitement of the opportunity to continue the momentum and the client demand to bring that futures contract back.
There you go. So hit up Sean, hit up Rick, let them know you want. Hit up Ariane over there at Cboe as well. Tell them you want RVX back, and maybe we'll see a nice tradable version of Russell volatility back for you guys. I know you guys want it. I see your emails, so share it with these folks here as well, and we can all get in on the fun. While you're out there sharing it, trade some contracts out there in Russell. Maybe you too. We're so close, as you mentioned. We're so close to 1600. A couple of one lots that could put us over the edge. We'll see. So that, who knows? That'll set up all sorts of fun technical levels. And the folks in Fidelity will be back on talking about how you guys are trading it up on their platform again. Either way, check it out for yourselves. You guys, of course, can always play along with everything we do here on the show. CMEgroup.com/Twifo. Stay tuned for all the great research over there from Eric and Blue and the rest of it. Eric will be back on soon. Everyone who had all those questions about his metal skew research, he'll be back on to discuss it in person very soon, maybe even next week. We'll have to see, but very soon here on the program. And on behalf of Sean and Rick and our friends over there at CME, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in a legion of questions. Keep them coming. We love to hear from you guys. And we'll see you back here tomorrow for Volatility Views, and then on Monday again for the Option Block, and all the way back here again to Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.